You remember those good old days a couple years ago where you could go out and buy a new Toyota for $35,000, drive it for a year, and then sell it for $45,000? Yeah, those days are gone. Take a look. This is a table from Car Gurus showing the price changes of used cars in the last 30 days, 90 days, and then on the right, year over year. And what you see is that nearly all used cars are beginning to drop in price, minus a few exceptions. Now, there's a little hidden reason as to why car prices are dropping is kind of a big deal. And the reason is, well, this. We have a record amount of auto loan debt out there. Now, I am not a financial genius. I'm just a random guy on YouTube. But it does not take a financial genius to know that when you have a lot of debt out there on this so-called asset that's dropping in value faster than expected, you have a problem. Take a look. Repossessions in America have been rising because people are struggling to make their car payments. When the average person walks into a dealership today, they want to buy a car. But affording the car payment is so expensive, and so a lot of people are now buying cars with the hopes or thought that they'll be able to buy this car today and then refinance their loan in a year or so when interest rates hopefully fall. You might have heard economists or car dealers telling you this. It sounds good in theory. You need a car and you feel like you deserve a nice car. You can't necessarily afford or want to pay all these high payments, but maybe you'll suck it up for a year or 18 months, and then when interest rates fall, you can just refinance this car and get a much lower payment. Except there's a little problem with that. The first problem with that is that used car prices are falling instead of rising. And number two, it is impossible to predict where interest rates are going to be in 2024 or 2025. So if you go out and you finance a new car tomorrow and used car prices continue to drop, you are more likely to be underwater on your car in the future because car prices might continue dropping. And now if it comes time for you to refinance, you have to hope that number one, interest rates will fall, which we don't know if that's going to happen or not in 2024. And then number two, if you're underwater on your car, you're going to have a tough time being able to refinance. That's why we're already seeing more and more Americans go underwater on their car loans. Your car is not an asset. It's a depreciating liability. And during the pandemic, it felt like an asset because car prices were shooting up like crazy because everybody wanted to buy a car, but there were no cars available for sale. So now all of a sudden, if you had a used car, you could sell it for more than what you bought it for. Or if you went out and bought a new car, you could drive it around for a little bit and even sell it for a profit sometimes. But that market isn't here anymore. And the difference between being underwater on something like your car versus being underwater on your home is that, well, your cars don't last as long as your homes. Unless you're driving a Toyota, of course. Not to mention the fact that the nicer your car is, the more expensive your oil changes, and we're seeing more and more Americans struggle just to pay for the maintenance and upkeep on their cars. This is where it becomes so important for you to become financially educated and not fall off of the same cliff that you're seeing so many Americans getting ready to do, because the reality is your car is a depreciating liability. You need a car to get to and from work, but when you go out and you finance a car that you overpaid for, hoping that you're going to be able to refinance this payment in the near future, you are taking a big gamble. And you're making that gamble with your personal finances. You're making that gamble with your ability to build wealth. And if we see more economic pain in the future, where now people need to sell off some of their payments, well, then you could see people start to sell off cars. And if people start to sell off more cars, that means cars would lose more value, because now you have a bigger influx of supply of cars for sale. And if that happens, now you can see more and more people become underwater on their cars, and that could create an even bigger issue if interest rates don't fall as fast as a lot of people would like. And if that doesn't happen, well, you can start to see why that creates more and more financial issues for a lot of people. Again, this is where your financial education is so important. Now, before I go over an alternative option for you, I do want to let you know that if you are interested in building your financial education, we have a free ebook at Briefs Media called How to Build Wealth as an Investor. This ebook will walk you through things like, number one, how do you build the mindset of an investor, to how do you save your first couple $1,000s, to how do you start investing, what are different ways to invest, how do you invest for cash flow, to then how do you spend your money smartly, to how do you earn your money smartly, to how do you protect your assets. This ebook is completely free, and you can get a ton of value in this ebook. So if you want to read this ebook for free, I got the link to how you can download this ebook down in the description below, or you can go to briefs.co/ebook. Cars are one of the largest wealth killers for Americans. Because when you go out and you finance a car, now you're paying $300, $400, $500, $700, $1,000 a month just in your car payment. Then on top of that, you got to pay for car insurance. Then on top of that, you got to pay for your car gas. And if you're driving a nicer car, you got to pay for the premium gas. And if you're driving an expensive car, you might be eating up even more gas because you got the V8 in your car. Then you got to pay for the expensive oil changes because the nicer your car is, the expensive the maintenance is. And this is where now you're spending all this money to upkeep this car. You're paying interest to drive the car, and this car is losing value. And then what ends up happening for so many people is because you're putting so much money into your monthly car payment, you don't have any money left over to actually invest into assets that can actually make you any money. So now, if you have a car payment, but you have no dividends coming in, or if you have a car payment, but you have no royalties coming in, or if you have a car payment, but you have no rental properties paying you, your priorities are in the wrong place. You look like you're rich, but you're really just making somebody else rich. And this is where now you're going to say again, but Jaspreet, I need a car to get to and from work. Yeah, that's fine, but you don't need a $50,000 BMW. And this is where it gets hard, because the best thing that you can do in this situation is get out of that car payment and go out and drive a car without a car payment. When you went and bought that $50,000 car, you had to put $8,000 down to drive that car. You can find a car in good working condition for $8,000. Trust me, I know. I'm driving a car that's now worth a lot of money. So now, if you drive a car that's worth $8,000 and you don't have a car payment, now not only do you no longer have to pay for the premium gas, now not only do you have to not pay for the expensive insurance, now not only is your oil change a little bit cheaper, but you don't have to send in $500, $600, $700 a month to the car company. Now you take that $500, $600, $700 a month, maybe even $1,000 a month, because more and more Americans are spending $1,000 a month on their car payment. You take this $500, $600, $700 a month that you keep in your pocket, and now you just put this money into your investments. You're not going to put this money in your pocket to go and spend it on a vacation to Cancun. I want you to use this money to make yourself wealthy. Now, I'm not going to go over where do you invest this money in this video. You can check out the ebook or watch some of the other videos on my channel. But you want to take this money and start putting it to work. That way this $500, $600, $700 a month can be used maybe to create a new income for you, maybe to buy some more assets for you, maybe to do something that will actually make you wealthy instead of just driving around in a car that makes you look like you're rich, but it's actually keeping you broke. And what we're going to see happen is if interest rates stay high, it's going to create more pain in the economy. It's going to create more pain in the car market, because you had a lot of people that overpaid for cars in 2021 and into 2022. And you have a lot of people that are buying cars thinking that they're going to be able to just refinance as soon as interest rates drop. But if people are underwater on their cars, or if people don't see interest rates drop as fast as they would like, that's going to create more pain in the car market. Not to mention the fact that if we do see any pain in the economy, if we do see unemployment rise, and people are driving around in cars that they can no longer afford, well, you can see where that would be a problem. And this is where you want to be on the side of financial education and financial understanding instead of being the person that's paying the price. And unfortunately, that's the way our economic system works. But you have to start building your financial education. That way you can be the one that can take advantage of opportunities, whether it's buying a car at a cheaper price, or buying a car that you can afford, or investing in assets when they're on sale, as opposed to being the one that's paying the price. But that's what financial education is all about. And I've probably said this 100 times now, and this is probably one of the most fitting places to say it, so I'll say it here. 2023 is not the year for you to go out and finance a new truck. 2023 is the year for you to get financially smart, build your financial education, and build your financial preparedness. US News put out this article on what they call the 7 best dividend-paying ETFs that you can consider buying. Here are the 7 ETFs that they recommend, and again, investing has risks. Make sure you always do your own due diligence and never blindly follow a random guy on YouTube. Number 1, SCHD, which is paying out 3.6% a year in dividends.